Good morning, this is Todd Horwitz from Bubba's Bottom Line, coming to you from the floor of the CME Group in Chicago. And of course, what do we have here? We have a market that is waiting and waiting and waiting for the Federal Reserve. We've got the Fed tomorrow looking to decide, A, if they're going to raise interest rates, which that's probably a negative. B, how they're going to unwind their balance sheet, which I don't think they know how they're going to unwind their balance sheet yet. I think this is one of the biggest problems. You know, one of the biggest problems with economists is they don't understand debt. They don't understand the other problems that go along with running a business. So I think what we have here is a market that is kind of building itself on edge to make a very big move one way or the other. Now, again, it could go either way. I would suspect it will be to the downside before it's all said and done, but we're not going to go out on a limb here and say that it's only going down. The thought of rising interest rates, but really, even if they don't talk about the rise, what they're going to talk about is the potential unwinding of their balance sheet. If they do start to sell bonds on the open market, that will increase the rates anyways, and that could be the way that they're going to get it done. This is where it becomes a little bit tricky, where they're not talking about rates, but they can actually artificially hike them. The one thing I do ask is if the economy is in that great a shape, Janet Yellen, why have we not already raised? That's the one problem that I can't get my head around, is we continue to see great reports, supposed great reports, that we don't get these interest rate hikes, which really have bogged down the economy. That'll do it for today. This is Todd Bubba Horwitz from Bubba's Bottom Line, coming to you from the floor of the CME Group in Chicago.